Are your charts just a complete chaotic mess of lines and indicators? Well, today we're going to simplify your trading down to its most powerful core. We're going to break down a strategy that uses just that's right, two crucial lines to forecast the biggest moves of the day. I mean, does this look familiar to you? A screen so cluttered with squiggly lines, it's basically impossible to make a clear decision. This is what we call indicator overload, and it's a super common trap that leads to, analysis paralysis and a ton of missed opportunities. Okay, now just imagine wiping all of that noise away. What if I told you the key to the day's entire trend was hidden in plain sight, and all it took was drawing two simple lines? That is the promise of the clean, powerful strategy we're diving into today. So here's how we're going to break it all down. First, we'll cover the core secret. Then we get practical and show you exactly how to mark your levels. After that, we tackle the big one, telling a real move from a total fake out. And finally, we'll get into execution and the all-important trading mindset. So what is the secret behind these two lines? Well, it is all about understanding where the market's fuel is stored. You see, the highs and lows of a trading session aren't just random numbers. They are strategic levels, basically magnets for price. The key concept here is something called session liquidity. Think about it. Above any recent high, you've got tons of short sellers placing their stop-loss orders. And below any recent low, all the long traders are putting theirs. These clusters of orders create these huge pools of liquidity. And guess what? Big institutions, the smart money, they hunt these zones to fill their massive positions. And this whole strategy works because of the market's daily rhythm. The Asian session is usually pretty quiet, kind of the calm before the storm. This lets all that liquidity build up. Then, when London and New York come online and big news starts hitting the wires, traders go on the attack, targeting the edges of that Asian range. And boom, that's what triggers the day's major moves. All right, enough theory. Let's get practical. How do we actually find and draw these two powerful lines on our charts? It's way simpler than you think and takes less than a minute once you know what to do. Seriously, it's just 30 simple steps. First, you identify the Asian trading session. A common window is about 5 p.m. to 2 a.m. Eastern Time. Second, you find the highest price that was hit during that time, and you mark it. Third, you do the exact same thing for the lowest price. That's it. Your battlefield is now defined. And you can see it right here in action. The vertical lines are boxing in that quiet, consolidating Asian session. The green line marks the high, the red line marks the low. These two levels now become our lines in the sand for the upcoming London session. And this same principle works across any 24-hour market, whether you're trading currencies, gold, or even crypto like Bitcoin. Okay, now we get to the heart of it, the million-dollar question. Once price starts creeping up to one of your lines, how in the world do you know if it's a genuine breakout that's about to run or a deceptive fake-out designed to trap you? This, right here, is the skill that separates the pros from everyone else. You have to understand the character of the move. A true breakout is powerful. You'll see a big, full-bodied candle closing firmly outside the range, usually on high volume or some kind of news. But a fake-out, or what we call a liquidity grab, it's weak. Price just kind of pokes through the level, leaves a long wick, and then snaps right back inside, trapping all the eager breakout traders. Here's a textbook true breakout. Some big news hits the market, and you can see price just slices right through the Asian session low without even looking back. The move has serious momentum and a clear reason behind it, which fuels this sustained downward trend. Now, contrast that with this. Price pushes just a little bit above the Asian high. All the eager buyers jump in thinking, this is it, to the moon. But look what happens. It immediately reverses and tanks. This wasn't a real move. It was a trap, designed to hunt all the stop losses sitting just above that high before the real move started in the opposite direction. Knowing the difference is one thing, but actually profiting from it, that requires a concrete plan. And that means having strict, non-negotiable rules for your entry, your stop loss, and your profit targets. Look, professional traders run on rules, not emotions. This table shows a pretty conservative way to manage your money on a breakout. A pip is just the smallest price move, and using them helps you define your risk precisely. The real key here is the two-part approach. You take a quick profit on the first half to lower your risk, and then you move your stop to break even on the second half. This protects your capital and gives the rest of your trade a free shot at becoming a massive winner. So you've got the perfect technical setup. You have a rock-solid set of rules, and it's still not enough. The final piece of the puzzle, and honestly the hardest part, is mastering your own psychology. Your mindset will make or break you in this game. And let's be real for a second. This strategy is not about winning 80% of the time. It's not. You are going to have small, managed losses. The entire goal is to catch the one or two massive home run moves that more than pay for all those little losses combined. Understanding that is absolutely crucial to staying in the game long term. A truly successful trader has these traits. You gotta have patience to wait for that perfect, clean setup. You need the discipline to fight off FOMO, and you need persistence to try again after a trade doesn't work out. But maybe most importantly, you have to be mentally flexible. If a breakout fails, you have to be ready to flip your whole bias and trade the reversal. Your discipline, that is your armor. And there you have it, a complete framework for trading one of the market's most reliable patterns, all built around just two lines. But the real learning starts right now. As you watch the markets, start asking yourself, are the London breakouts cleaner, or do the really big moves happen after New York opens? Figuring that out is your next step to mastering this entire setup.